Thanks for joining me on my market report. My name is Mike. My market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis, whether it might come from something from like the economic calendar, the headline news, or what's out there with geopolitical. But sometimes it gets even more confusing when the market sentiment changes, when now good news is bad news, and now vice versa. We try to delve into that and give that information out to you so that way give you the explanation that you need to make an informed decision, or if you're just kind of following along, just want to know what's going on. Hopefully it'll give you the information you're seeking. A little bit about myself is I am a loan officer. We do loans, and I work with a national lender, so we do loans in all 50 states. So I'd love to be able to help you with your next refinance or purchase. So if you need to get pre-approved to buy your next property, we're here for you. But more than that, we like to be a resource for you. So if you got any questions you need answering, we'd love to be more than happy to answer or get the information for you. So please feel free to reach out on that regards as well. To begin, why don't we start off with the economic calendar today? It's actually rather slow in terms of data-wise to be out there. Today we got the consumer sentiment. So for the month of May, so April, we went to 65.2. Forecast was coming in at 64, so a slight dip, and it came in much worse than that at 59.1. So this is something we'll have to watch on, because if people aren't feeling good about where things are at, they're going to stop buying, and then that could put us into a recession. People need to be feeling good, and then that could have that trickle down effect where things start slow down, the economy starts slowing down, get job losses and everything else props up as regard because the slowdown. So this is something we'll keep an eye on because that is a pretty steep drop from 65 down to 59. So you're talking about 6.1 basis point or 6.1 on the chart there. Headline news. That's the only thing we got there. But headline news today, not much of anything. It's pretty much stocks are up. They're kind of been taking a beating. They'll be most likely down for the week because they took a pretty big beating throughout the week. But today they're kind of rebounding. So you basically got people buying in low. Buying in low, so as they say, sell high, buy low. That's what's kind of going on. After taking a bit of a beating, you got people kind of traders coming in and buying in while they're low at this point. So as a result, mortgage-backed securities are down a little bit today. We've been kind of going the opposite direction where stocks are taking a little bit beating, but we've been kind of rising upwards as a benefit to us. As they're down, money is flowing from the investment dollars are flowing from mortgage-backed securities back into equities today. We did approach and hit off the 25-day moving average yesterday. It seems to be putting a ceiling on us, so it did push us down a little bit. Today we're down below it as well. Here's today's activity. But as you can see, about 7 o'clock is when we had the consumer report. So we were kind of in this middle range, and then we dropped just before the consumer, right about the consumer report time, or consumer sentiment time frame. And then since we've been kind of working our way backwards, back up a little bit. So right now we're down about 16 basis points. Rate sheets will be down a little bit worse today. It'll probably be within an eighth of a percent of the rate is what we're looking at in terms of that. Treasuries did climb a little bit. It's breaking above its 25-day moving average, so that was kind of short-lived, be below its 25-day moving average. So as you can see here, we're right around 2.92 at this point. So lastly, we'll take a look at what's the average rate for conforming limits. They do have points built into it, so they're not in increments of an eighth of a percent as we usually quote. We'll start off with 30-year fix at 5.35 now, and 15-year is at 4.75%. So these are kind of the average or median prices out there. So if you guys would like a rate quote, please feel free to reach out. We'd be more than happy to accommodate you guys. If you guys like these videos, we'd greatly appreciate if you guys smash that like button. And again, we're here if you guys got questions. Thank you very much for your time, and thanks for watching. Yeah, hope you guys have a great day. Enjoy your weekend, and we'll look forward to see you guys on Monday's video. Bye-bye.